Gold set to gain on Fed rate cut expectations. Key factor, lower real yields. Gold prices are holding firm near recent multi-week highs, as global markets overwhelmingly price in a 25 basis point rate cut by the U.S. Federal Reserve. At its December 9th to 10th Federal Open Market Committee meeting, analysts widely agree that this shift toward monetary easing provides a strong structural tailwind for the precious metal, driven by the core inverse relationship between interest rates and gold. The dual tailwind for gold, lower rates and weaker dollar. The fundamental logic supporting gold in a lower rate environment is twofold. 1. Lower opportunity cost. Real yield. Gold is a non-yielding asset. When the Fed cuts its policy rate, it effectively lowers the returns on interest-bearing assets like U.S. Treasury bonds. This reduces the opportunity cost of holding gold, making the metal a more attractive store of value for investors. Analysts from State Street noted, Fed easing and a weaker U.S. dollar create a dual tailwind for gold, both directly through lower real yields and via denomination effects. 2. Weaker US dollar. Lower interest rates typically lead to a weaker U.S. dollar as global investors seek higher yields elsewhere. Since gold is denominated in USD, a weaker dollar makes gold cheaper for buyers holding other currencies, thereby increasing demand. Current market probabilities, tracked by the CME FedWatch tool, show an approximate 90% chance of a 25 basis point cut. This is why gold has been trading with a bullish bias, consolidating near the $4,230 per ounce level. The key risk, Powell's forward guidance. While the 25 basis point cut is highly expected, the most significant risk and potential volatility trigger lies in Fed Chair Jerome Powell's commentary and the updated dot plot, summary of economic projections. Dovish Cut, bullish for gold. If Powell signals that the rate cut is the start of a sustained easing cycle, implying further cuts in early 2026, the dollar would likely slump. Treasury yields would fall further, and gold could see a sharp break toward the $4,300 to $4,340 resistance zone and retest its all-time high. It's $4,381. Hawkish Cut, bearish for gold. The October 2025 meeting demonstrated that the Fed's language is key. If the Fed cuts rates but Powell delivers a cautious or hawkish message, suggesting the cut is a one-off adjustment and not a guarantee of further easing, gold could experience an unexpected pullback. This would be a signal that the market got ahead of the Fed's real intentions. Key support levels to watch are $4,160 and $4,115. Here's the text to process. Medium-term outlook beyond the immediate decision. Analysts maintain a robust long-term outlook for gold, supported by continued central bank buying. Central banks, particularly in China and other developing economies, are continuing their aggressive gold accumulation streak. Safe haven demand, elevated global geopolitical risks and economic uncertainty, including the record $346 trillion global debt level, continue to drive safe haven flows into bullion. Many forecasts point to sustained strength above the $4,300 level into 2026, with some analysts even suggesting gold could reach the $4,500 to $4,800 range. If the easing cycle gains momentum,